What if the entire financial system collapsed? What would happen? And more importantly, what can you do to possibly protect yourself and maybe capitalize on such a situation? Well, let's go back to the year 2008. And at that time, you probably heard about Lehman Brothers and Bear Stearns was on the verge of collapse. And in fact, Treasury Secretary Hank Paulson famously got on one knee in front of Nancy Pelosi and told the House Speaker, look, if you don't pass a bank bailout bill, the entire system is just going to collapse. He basically said, I cannot guarantee the function of the United States or global economy if you don't pass a bank bailout bill. So let's take a scenario where we have a replay of 2008, and a lot of people say that we may have a replay of 2008 because a lot of the problems from the 2008 crash hasn't really been fixed. It's just been sort of camouflaged, and we may be headed towards an even worse situation later. So let's just take a situation where the markets begin to roll over, and we have a market crash, and the markets close for the day. Markets, let's say, close down 10%, and you begin to see bank failures, you begin to see companies failing, stocks going to zero. But this time, there could be no real bank bailout because essentially now the banks are too big to fail. A lot of banks now are literally many times bigger than they were 2008. So what would happen? Well, the first thing that would happen is the stock market would simply close. It would simply close until things could be fixed to basically stop the outflow of money, and that would include these sort of inverse ETFs that are like double and triple. You've probably seen these double and triple inverse ETFs. That would be the first thing that would be shut down. Then the second thing would be the stock market as a whole. The next thing that would happen is you would see probably a run on banks where people would just panic and they'll want to pull their money out. So banks will probably restrict how much cash you can pull out because they physically won't have enough cash. Banks typically only, out of all the deposits they have, they really keep less than like 5% of the cash that equals their deposit inside the bank itself. If the bank has $20 million in deposits, it may just have $1 million in cash sitting around because a lot of people are just not withdrawing cash like that on a daily basis. So there'll be no cash at the banks. People will go to the ATMs. There won't be cash at the ATMs. And people will really begin to panic because now everyone's just going to have to buy stuff using cards. And you just have to hope that you have money on your debit card so you can buy stuff because people are going to run through all the credit on their credit cards. So now you're going to have people who are maxed out their credit cards. Maybe they'll run out of money on their debit cards and they can't get cash. That will generally create a panic. The second thing is the price of precious metals, gold and silver will skyrocket because anything that's finite is going to see value. Cryptocurrencies will begin to rise in price probably across the board. Maybe some fraud cryptocurrencies won't, but your Bitcoins, Ethereums, Litecoins, those will all rise because they have a finite amount of currency, and plus they're very easy to buy and transact. So the price of precious metals, cryptocurrencies will go up. You'll have a bank holidays, the banks will be closed. There'll be stricter financial controls. You'll see small banks failing. Some larger banks will fail. Now, for people who have money that have deposits in the bank, people don't have to worry about if they have less than $1 million, they have 250,000, because the banks, the FDIC, Federal Deposit Insurance Corporation, will insure that money up to 250,000, and if you have money in a mutual fund, that number goes up to 500,000. So if you have that amount of money, you'll be fine. It may take a while to get your money out of a bank if it fails or whatever, but you're covered by the FDIC. Now, for those who have more than that amount of money in a bank account, they're screwed. If a bank fails, they're only getting 250,000. So if someone has $1 million in the bank, they're going to lose 750,000. But that's a rare case. A lot of people, even rich people, know better than to keep that amount of cash in one bank account. Some people will probably get hurt by that, but if you have some common sense, you shouldn't be able to. Companies sensitive to movement in the market, such as financial, real estate, and other companies with heavy debt will declare bankruptcy. People who are cash rich, like Warren Buffett, hedge funds that hold a lot of cash, companies like Apple that hold like $100 billion in cash, they'll be able to buy up assets other companies are failing for pennies on the dollar. This is a case where Warren Buffett will be able to buy whatever he wants. He could probably buy every company on his buy list for pennies on the dollar. So people who are cash rich will make out like bandits, like they usually do in most crashes. In a worst case scenario, that will be amplified 10 to 20-fold, where Warren Buffett will be able to buy entire food companies for a 90% discount. So that's why it's always important to hold cash, because when you do have a market crash, when they happen once every 10 or 20 years, great companies like Coca-Cola just go on sale for 50% off. So the biggest lesson here is always hold cash just in case the banks actually physically close. Hold physical cash at home, or junk silver, or cryptocurrencies, and also have cash maybe in short-term T-bills if you have a lot of money, so you could be able to take that cash and redeploy and buy stocks at a discount when the markets do eventually reopen. So I hope you enjoyed this video. If you did, please be sure to like, share, and subscribe. Thank you. Bye.